much. Thank you so much. Thanks everybody for entertaining us today. We have a very interesting guest. I'm excited to speak to Chance, who is the co-founder of Jewel. I'm not going to give the intro because I think you do a much better job. So Chance, tell everybody who you are and what you're working on.
Thanks. Well, I've been building software and internet companies for about 20 years and got squarely focused on fintech for the last 12 or so, and then worked at the intersection of tech and policy for a bit. Had worked on a portion of what became the Jobs Act in DC and founded Crowdfunder, one of the first equity crowdfunding platforms. Got to help a lot of entrepreneurs raise money there. That led me to a few things, but investing in, as an angel, some early stage digital asset and Bitcoin related ventures. And I became incredibly enamored in the space. I felt like it was the fastest moving, most dynamic, most collaborative thing. And I thought I was doing something cool with crowdfunding at the time. And once I saw what was happening in crypto, I was like, I got to get out of this and into that. So that led me to a few things, but fast forward to, I saw the pain point and the opportunity around both policy and banking. As you know, so many crypto people with Bitcoin have had challenges. And on the institutional side, the pain point with banking is even more acute. So I ended up starting a bank outside of the United States in Bermuda. We're now applied to, I can't talk about the regulatory status that much, but very confident, but to be the first bank in Bermuda for digital assets, and our clients are signed on like some of the largest exchanges in the world. So incredibly excited about the future, and part of the reason of being for the bank is not just to provide services to those clients, but to really power the next set of rails. Probably the first iteration of that, and our approvals will be about stablecoin issuance directly from the bank, which I'd love to talk to you about today. And I think that sets the stage for if and when there's CBDCs, banks will also play a role with that. It won't just be a central bank by itself in all cases. And so that's really the focus of my work over time. It's empowering the crypto community, but through the pain of the traditional banking system, which you don't want to touch that much, trust me.
So this is interesting. We had a conversation backstage about maybe not being smart enough to say no. Given all of the problems you had to solve to get to where you are today, would you do it again to get into space?
Oh my God, definitely not. Look, it takes years to get a banking license on average, and Bermuda was no shortcut. So, we have a great status pending approval right now, as far as I can tell you. And I wouldn't do it over again. It took over 2.5 years, but this would be the first banking license in Bermuda in 46 years. So I wouldn't do it over again, but I'm so happy where I'm at. And look, if you just think about the market, we've grown from $1 trillion kind of recently, a year and a half ago, to almost $3 trillion, and then we're down a little bit. My view is we'll be 10 trillion plus in the next 2 to 3 years. And all of that, a majority of that will be outside of the United States. A larger portion is starting to move in the US. But the pain point I'm looking to solve is a lot of those digital assets and the people buying digital assets and trading them. There needs to be good facilitation of that with banks offshore. So I think everyone here is really bullish. I don't have to sell that.
So you did something interesting where you chose Bermuda as your main jurisdiction. A lot of us are trying to figure out, should we go onshore in the US, offshore? Can you talk us through that decision process and how you ultimately landed on offshore in Bermuda versus the US?
Well, actually, I tried in the US. I was looking at doing something similar in advising de novo bank effort for a while in the US, engaging with the OCC, the US federal bank regulator. And it turns out if you want to waste your time, you can go talk to the OCC, and they'll send you to this place for special projects. It's called the Office of Innovation, and that's where you waste time and you never get anything done, in case you want to know. They're very nice, but I think it was early, and at the time, they hadn't picked up and I think learned as much. So I spun out of that thinking, God, the US doesn't have its act together, which maybe we're starting to get the act together, but it's kind of driven more by greed and tax, I think, right now than it is by cohesive policy. So I looked offshore for something bigger and better, and Bermuda was in a great space. The premier, David Bird, has been a driver there to reinvent Bermuda in its kind of second phase as a financial services economy. And I was lucky enough to connect with Premier Burt and hear his vision and be invited to bring a bank to Bermuda to do this. And then also meet Sir John Swan, who was a former premier of Bermuda, who actually helped create the reinsurance and insurance industry. So Bermuda is kind of a conservative place. It's not as fun and wild and as loose as Cayman or other places in the Caribbean. But I think that's a great thing long term. to build something like what we're building as a bank to serve large institutions at scale. So it takes longer, it's harder. Bermuda has a higher bar, but I think as we see larger institutions move into in the world have to, in some ways we don't like it, have a higher level of compliance, AML, KYC. But I think ultimately once we go through that pain as an industry, things will move faster. And so I'm trying to do that core infrastructure plumbing to help people both on the technology, banking, and compliance side, and then deliver that via an API. And so Bermuda is an amazing place to do that, and it's been a great place to have a collaboration both with the Premier Bermuda, the legislation, the legislators, and then also the regulator who picked up and made quick work of it. So, and then it doesn't hurt. You can drink some dark and stormies, and there's a nice reef. You like diving, and that's probably all I can say.
Beautiful weather. I hear there's a great French bakery there that we know the owner of.
What's that?
I hear there's a great French bakery there that we know the owner of.
Oh, yeah, XBTO, Philippe's Bakery. Yeah, have you been?
I have not, but it's on my bucket list.
Okay, nice.
So you're focused in Bermuda, which opens up a lot of avenues internationally for you. What do you see the opportunity internationally for a type of product offering that you have, which is stablecoins and banking?
So our vision in starting the bank, which was 3 years ago, I think is kind of timely. It takes a long time, so you hope to go where the puck is going. And if you looked at the president's working group, which a few people have talked about, I think yesterday, it was a focused group to take up policy around stablecoins to address what I think regulators see as big risks. And the president's working group is the federal bank regulator, the OCC, the FDIC, and the Treasury Department. And they all came out with a report that, in essence, I'm paraphrasing, said we want and suggest that stablecoins are regulated and issued by what look like banks or are banks, and if they're US dollar, should ideally be FDIC insured. That's exactly what I've been working to get approved and do, but from outside of the United States for international. So I'm really bullish about, and you've seen the growth of stablecoins today, banks will be needed as a kind of utility, if you will, to help enable not only the leading existing ones, but to issue their own in some cases. So I look at what we're doing as a way to support the industry in that transition and build from the inside. Like, I love that everyone's building from the outside. I wish I was as cool and as DeFi today, but that's not what I'm building. I'm building the banking side to support that, right? And that's important work, and that'll help the industry. So we're really excited, Jewel, about being a utility for stablecoin issuance, not only just for our clients and issuing ours, but we have discussions with most of the large stablecoin issuers of today that want banks to help play a role in facilitating, taking deposits, doing the things that they can't do because they're not banks oftentimes.
So you see yourself kind of the bridge between the traditional finance and stablecoin space, or did I mistranslate?
In the simplest of terms, that's exactly what we are. We're just a bridge between the traditional fiat system and that, and we can abstract our clients from that over an API. So if you're geeky and you love programming, pick up our API, it's connected to a bank account, and you could settle stablecoin directly into your account in and out in near real time. That vision, I think, has been looked at, sort of being delivered on, but it's even greater pain point internationally, and there's not as well-served banking infrastructure and opportunities. So I'm super excited about the response to that from some of our biggest clients, and I think it's a big bet when people say, hey, I'm doing these things at scale, I want to work with you, and I'll even integrate your business via an API. That's a lot riding on that. So it's interesting building banking because you have to build at such a different scale. You have to spend years just getting an approval. So the margin for error is a lot different. So it's been exciting, a huge learning experience for me. And then I brought in a really experienced banking team. I'm the crazy guy who starts companies and thinks he can pull this stuff off, which is great.
That's what you want in a founder, correct?
I guess so, yeah. I think we have to be, we were talking about this earlier, you have to be kind of dumb enough to believe that you could do something that someone hasn't done, and then hopefully you have the confidence and the smarts to learn on the fly. And things are moving so fast, especially in that world. People haven't done this within banking, or very few. So yeah, and then there's probably a lot of founders out here. You have to be willing to endure kind of the pain of the uncertainty and the unknown. And certainly in banking, you could be held up for years. It took me several years to get this banking license, or maybe get this banking license.
And the sales cycle is long. I mean, banks are not notorious for moving very fast. So when you think about stablecoins, do you see banks coming in and competing with you? Do you see it being complementary? Can you maybe shed some light on how that space is going to grow, in your opinion?
Well, my view is that I'm I like thinking out into the future. What does it look like in 3 to 5 years when a lot of banks have not only what they're doing now, which is, oh, we want clients and we want the revenue stream, which is custodying and helping people buy Bitcoin. You see banks lining up to do that. And I think stablecoins are the next thing that will come quickly once there's some more regulatory clarity. So my view is, many years out, stablecoin acceptance in banks will become as seamless as accepting wires, right? Like almost every bank has a SWIFT number, and if they don't, they're on a remote island to themselves. It doesn't make sense. So we're building the new rails, and I love that we get to do it with peer-to-peer technology generally, distributed ledger, and that's always been my vision when I build software companies. I like to build on more open source public software stacks. And it's incredible that we're at a time where we're now seeing that come into banks and banks looking to adopt it. And so that's been my focus, a multi-chain, as much as we can be open and permissionless environment, but for your money. So I love the vision. At the end of the day, we're not focused on like cross-border or retail. We're focused on servicing institutions. But we could help power someone on a peer-to-peer basis, send $1 or €1 or something else, and it's all seamless connected to their bank account. So I think that new set of rails brings us closer and gets, ironically, banks out of the way. That's why I'm in it. I'm not trying to be the banker. I'm trying to be a technology layer that just makes all this simpler and easier for all of us who like to interact with each other and have banks out of the way. Okay, how can I facilitate that as a friendlier actor?
And as you're preparing for the different type of stablecoins, do you see this being a winner-take-most stablecoin platform, meaning there's one or two, or there's a massive variety of them where you have to have interoperability?
I don't think this is beyond a power law distribution. I think in the success of these, you're seeing the environment only change a little bit. I think there could be big things that happen and challenge, but I'd liken this, and I like looking at history for things like this. So there was something called the wildcat banking era early on in the US. And at the time, there was a new set of tons of small regional banks that popped up around the US, and they would issue their own version of dollars. But they intentionally made it hard to redeem, and you had to like go out into the wild, and oftentimes they had bad rates for redemption. And that distorted the market. It was really bad for end users and consumers, and the market did not have standards. And so I think we're in this time where there will be a proliferation of Bitcoin. You're going to see a lot of banks and bank consortiums try and jump in the game and be like, oh, look at all these billions. Once they get more comfortable with crypto and the risk, they're going to want to be all over it. That's coming. Banks just move slower. And then there'll be some stablecoin wars, but I think there'll be forced standardization. And so at the end of the day, long term, it won't matter that much, because what it's really about is what banks do, which is move money, hold deposits, and then get some fees off of it. So yes, people might have preferred stuff about the issuer of stablecoins today, like for example, USDC. They, as the issuer circle, get a lion's share of the deposit revenue earning interest. I think that will be flatlined and compressed in the future, and it'll look like what US dollars look today, and we'll stop talking about blockchain rails in this world. But that's when they're really seamless. But I think things are moving so fast, that's going to be 4 to 5 years from now.
Wow, I mean, that's quick for a bank too. That's amazing. What other innovations are you seeing in the stablecoin space that you could share with us?
Well, there's kind of forced innovation. So it's amazing how fast the industry has adopted. You saw what Tether was doing, and they got a lot of trouble in New York with the AG there, and they got a tiny settlement, a slap on the wrist, basically. But what they were doing is they said initially, and I don't want to talk about the case, I have no beef with Tether. We wouldn't be here if not for the great work in innovation. But regulators had a problem with how the underlying funds that said initially that it was one-to-one backed were being invested. And so I think the innovation, while it sounds kind of boring, I think is really important for the end users who hold stablecoins is, well, if I come and there's a run on the bank or a major crisis, if I want my dollars back into a bank account, not holding this token, am I going to get it? And so the big innovation that's happening right now sounds kind of boring, but it's on the investment side of how all those funds are being invested. And I believe disintermediation in some sense from this, what we call a tri-party model. So you have an issuer that's sometimes an MSB or sometimes an unclear offshore company issuing a stablecoin. and then you have a separate custodian who holds the funds. In that arrangement, you could get totally screwed as a holder of a lot of stablecoins in a run on the bank or bankruptcy or anything like that. And so what I see happening and what we've been working is disintermediate that model, or at least move the issuance back up to the bank level where regulators feel more comfortable. There's a little bit more transparency. Banks are incredibly audited. They have to put out a lot more transparency than your average like MSB or something like that. So it's not only the investment of funds, but the structure of how stablecoins are legally issued. That is going to become systemically important, and regulators really care about it now. What happens, and can you have giant insurance companies using these rails if there's that risk? Probably can't. So the innovation has happened today where the trading industry in crypto has driven most of this. And then there's some offshore banking stuff, which I think is really innovative. People have access to dollars and euros. I think that's super cool. But regulators are going to force some changes on us. And I think that will drive more onus on issuers and on holders for KYC. And I'll say maybe some of that's good, but there's also some privacy implications about that I'm a little bummed out. So I think that war is playing out, and I mean, I want to fight for our privacy. I'm nervous about what stablecoins could do in some senses, and what CBDCs would almost definitely do with central banks wanting tons of information that they should not be having about their citizens. So I think that war is right on us now on a regulatory and legislative side.
And when you talk about the war, do you see it as banks trying to rush for stablecoins against central banks trying to issue stablecoins? Is that what you're talking about when a war, or maybe you can elaborate there?
Well, I think there will be a rush to understand and benefit from the growth of this industry from bigger banks, but a little bit of it's lip service, and they can't move as swiftly because they don't understand the risks, and they have so much to lose, and I can't tell you how slowly their product development cycles move. And then now, fast forward to central banks and their technology adoption cycles and their product rollout cycles. They're like beyond glacial. You're talking 5 to 8 year plus timeframes, not, let's lean startup, start iterating, test, and get a couple test users. So those things are a lot farther out, but so many people are doing some really great work around CBDCs. I just don't think we'll see that because of those timeframes that are implicit. But I think there's a reason why the people are more defensive today. The Chinese yuan, which is not really a distributed on a ledger token, but they're billing it as such as a CBDC. I think the US sees that it's behind. It could be in a bad position. In this market, it's not the center of the world, and I think that's really cool. And we have a lot of catching up to do, and maybe it'll happen. But I'm happy for now that I'm outside of the US, although we have partner banks in the US and we have to adhere to laws. I'm happy we can move swifter and faster and do things where the U.S. isn't innovating. And if regulators can get their arms around this in the right way, I think we'll be in a good spot, but I'm not that hopeful about it today.
And what do you feel the impact globally from stablecoins is going to be? Is it a disintermediation of the dollar? Is it a ban on overall currencies? What's happening globally with stablecoins in your eyes?
Well, I think ultimately it brings, part of the purpose is the medium brings more power to the end user. And crypto has pushed a lot of activity, obligations, and risk out to the edges. And that's what peer-to-peer technology can do. That's what distributed ledger and wallets can do. So I think consumers and institutions at banks will continue to have better, lower cost, and more powerful and more free stuff to interact with each other. And banks that don't get on that and try and keep this walled garden, I think, will fall behind in a really significant way. So I think that's really beneficial for everyone long term, but it'll take a while for the banking industry, because it moves slow, to really get there. So I think that's one of the best benefits that is driving. I also think the issuance of every world currency as a fiat-backed stablecoin has really important impact benefits. And so I'm not focused directly on the underbanked, but I can't wait to have clients who use our infrastructure, our API, to help drive people close to banked or into banking through stablecoins, and they're creating that impact. So I'm not going out to Africa to build that, but we can, when we're launched, service clients in any non-sanctioned jurisdiction. So if you imagine a world where stablecoins, as they are, being used in wallets, but that can be directly tied to a bank account and become seamless and onboard people, that's going to move the underbanked line, I think, a lot further and add more people to the economy. And that's good for everyone. And then those people have access to things like credit scores, and lending. So that is going to be and is already impactful. And I think we're about to see this kind of Cambrian explosion of solutions in banking that will power that kind of thing. It's moving really fast.
That's incredible. Chance, it's been phenomenal speaking with you. I've learned a lot on this. I hope everyone else has. Where can everyone find out a little bit more about the project you're working on?
Thanks. DLT is in Distributed Ledger Technology, Jewel, JEWEL.com. I'm on Twitter, pretty accessible there, @ChanceBar, and I'll be around the conference. So it was great talking to you, and thanks so much.